A very good evening. Thank you for joining us here on this Monday. You're watching India Tonight. I'm Nivedna Prabhu, and like always, joining me is my colleague Sumita Karir. In fact, tonight we put the spotlight on how the Fitch Ratings has reaffirmed its long-term foreign currency issuer default rating for India at BBB-, citing strong economic growth and resilient external finances. In fact, let's tell you how Fitch has projected India's GDP to expand by 6.5% in the current financial year, supported by strong domestic demand, driven by public capital expenditure and steady private consumption, Sumita. But there's lots more that we have to put in perspective tonight.
Absolutely, Nivedna, because Fitch has also noted that the recently announced 50% tariffs by US President Donald Trump are unlikely to have a significant direct impact on India, as exports to the United States, they account for just about 2% of the GDP.
In fact, we will be decoding that as well. But let's tell you how RBI Governor Sanjay Malhotra has spoken about the resilience of the Indian economy. In fact, he says that India is set and projected to be the third largest economy of the world. Let's listen in to his viewpoint.
The Indian economy also has expanded manifold. It continues to be a symbol of resilience and hope. The achievements of the Indian economy, despite unprecedented challenges in the last few years, are undoubtedly very creditable and widely recognized. The Indian economy today is characterized by robust macroeconomic fundamentals. The Indian economy rebounded post-COVID. We recorded 8% per annum, almost 8% per annum growth CAGR in the last 4 years. The IMF projects that we'll again be one of the fastest major economies in the world. We have very robust foreign exchange reserves, $695 billion US dollars, as per the latest figures that are available with us, sufficient to cover 11 months of merchandise exports. This has been all possible because of the very strong and prudent fiscal and monetary policies followed by the government and the various regulators over the last few years.
Well, that's the RBI governor stating that India's growth trajectory is intact. And of course, to discuss that big story tonight, I'm joined by a stellar panel of guests. I'm now joined by Swaminathan Iyer, consulting editor, ET Now. Also joining us is Pankaj Pachori, senior journalist and broadcaster, and Gaurav Sengupta, the chief economist at IDFC First Bank. Thank you very much, all of you, for joining us here live on India Tonight. Let me come to you, Swami sir, first. Now, right now it's Fitch, and earlier it was S&P which upgraded India's ratings. Fitch also states that the Indian economy is expected to grow at a 6.5% growth rate, which is decent as compared to its peers. However, the big question is this sustainable? Can this growth be called sustainable when a large percentage of the population still faces declining income versus the rate of inflation and the rate at which it is growing?
I would say that the main threat still remains what happens in relation to what Mr. Trump does and possible retaliations by other countries and the total outlook. A rating company like Fitch typically looks through the short-term thing. It says we are looking at the longer term, what has happened about. But, normally little ups and downs in the short run, you can say don't have much effect on the long run. What we don't know right now is how many tantrums is Mr. Trump going to throw between now and the end of his fourth year? Because, there is no telling when he turns around. Right now, I am hopeful, Fitch is hopeful that there is a negotiation that more or less settles the US and Indian things. So let us hope for the best. You cannot rule out the position that there is a lack of any advance on those negotiations. India insists we are going to buy Russian oil. India says we are not going to open up our agriculture. Two sticking points. What happens then? Does Trump give way or does he double up? Suppose he doubles up, will we give way or will we say, no, we hold strong? I think we will insist on holding strong. So at this point of time, it is very difficult to say what is going to happen in the coming year. It's all very well for Fitch to say 6.5. It may be 6.5. It could also be a good deal worse if these things don't work out. So all I would say is that, yes, if you're looking at the medium to long term, the Indian prospects undoubtedly look pretty good. In the shorter term, what happens is far from certain, and what happens in the short term may actually become so bad that it affects the medium term. Let us see. This is a point when it's extremely difficult to predict items because they are outside what you might regard as normal economic events. It depends on the whim of a US president who has made such changes, reversals, that it is impossible to say there is anything remotely stable about what Mr. Trump says and does.
Absolutely, Mr. Iyer. In fact, as you make those opening remarks, taking a cue from what you pointed out, one sector obviously where we're also drawn the red line is agriculture. Pankaj and Gaura, I'm going to come to the both of you as well. In fact, both of us will do. But before we continue that conversation, let's listen in to what Prime Minister Modi had to say as far as agriculture, and of course, echoing his previous stance of how that will not be given up in terms of the fact that there is a clear red line on that front. Listen in.
अपने लघु उद्यमियों से कहूंगा, मेरे छोटे छोटे दुकानदार भाई बहनों से कहूंगा, मेरे किसान भाइयों से कहूंगा, मेरे पशुपालक भाई बहन से कहूंगा, और मैं गांधी की धरती पे से बोल रहा हूं, मेरे देश के लघु उद्यमी हो, किसान हो, पशुपालक हो, हर किसी के लिए मैं आपको बार बार वादा करता हूं, मोदी के लिए आपके हित सर्वोपरि है।
Mr. Iyer, we of course heard what the Prime Minister had to say. Quickly taking a word from you, given that projection story as well, but look at how, I just want to also put into perspective in your vantage point as to how the NABARD data over here, 12,698, that's the average monthly household income of farmers, and sense of how politicians are doing aapta mein avasar, acting like perhaps messiahs of farmers, when reality is farming income is extremely low in India. While we do understand that wants to be protected as well, given this particular sector, how are you looking at this and perhaps bottlenecks?
Me? Sorry.
Yes, Mr. Iyer. Yes.
Well, okay. To begin with, I've said there's a considerable uncertainty on various things because of what Mr. Trump says and what India may or may not do on the agriculture or the other side. I would add that year after year, it does appear that on revisions, our GDP keeps getting higher and higher. There is something which is pretty solid out there. There is talk about, for instance, the investment rate is not high enough. I would merely say that if you take the average of the last 2 years of GDP, the average for the last 2 years after the revisions, 7.85%. That's a fantastically high rate when you consider the difficulties there have been in the world. So this looks like a country that is so resilient, it can take all kinds of things. And if the investment rate in India is high enough to produce a growth rate of 7.85, I mean, I keep wondering why people say investment is not enough. It is certainly true that some people would like investment to be more. Okay. If you say I want 9% growth, you can have investment even higher. But as of now, the investment is sufficient for the last 2 years to average 7.85. So I do not think that this talk about insufficient investment, I think this talk is much exaggerated. It does not take into account the efficiency, it appears, of our investment, whereby this amount of investment is enough to produce a rate of growth of more than 7%. So I think things are okay. The agricultural scene this year looks quite good. The monsoon has been reasonable, although there have been some shortages in some areas. So while there are some people who think that, the investment outlook has dimmed, etc., in one sense, it would have dimmed. The uncertainties created by Mr. Trump mean that we really don't know which sector is going to go which way in the next 2-3 years. To that extent, there will certainly be some impact on investment. That apart, in terms of demand and so on, I don't think there is any difficulty. We have been investing enough. There are no shortages. Prices are under control. In these circumstances, I think we can say that the outlook is pretty good. The outlook is pretty good. In fact, as the RBI governor said on various other fronts of fiscal monetary and various other things, India is a strong, stable country. It will be difficult for even Mr. Trump to upset it. So I think I would go along with the fact that it's stable. I don't think there is any serious problem on investment. Even on the consumption side, with a good monsoon, I would expect that that too is okay. There again, I would say if the consumption rate has been enough to generate a 7.85% growth for 2 years, how can you say it's not enough? How can you say consumption is weak? So when I see that, when the current rates of investment and consumption are in line with a very high rate of growth, I think, frankly, we are okay on all those parameters.
Right, Swami sir. So even as you speak about the fact that, India is fine on some of those parameters, but it remains to be seen if wage gap isn't really closed, and of course there's no income inequality, then whether consumption will be able to sustain itself or not, that remains a larger question. We'll come to that point in just a bit, but let me go across to Ms. Sengupta. Thank you very much for patiently waiting. I'll take you back to the point that Swami sir essentially was making, which is the fact that the larger challenge for the Indian economy is the impact of tariffs and how that really plays out, and how many more roadblocks will India have to face. But is that a considerable headwind in your opinion, given that Fitch states that the impact is largely going to be limited as far as tariffs are concerned? And we've seen that the government of India is also looking at boosting domestic consumption. We have a diversification strategy intact as well. Do you think the impact is going to be that much more on the Indian economy in the short term?
So if we look at the impact analysis, if let's say we have a 50% tariff on India by the US and it persists till March. So the mathematical, if you look at the sensitivity, you look at the share of India's exports to the US, you also incorporate the fact that 30% of our exports to the US are outside the bilateral tariffs. Taking all of that into account, it's around 40 basis points downward drag on growth. But then there are certain sectors which will be, the impact will be far more pronounced, like textiles, garments, really labor-intensive products. Where, for example, if you look at the textile sector, that sectors are India's total exports to the US of textiles, around almost 38% is just accounted by the US, where the margins are already low. And a 50% tariff puts us at a significant disadvantage compared to other Asian countries. For example, China has a tariff of 30%. Other Asian countries are somewhere between maybe a 15 to a 20%. So a 50% is a clear negative. The sensitivity analysis says that the first round impact will be a 40% drag or percentage points, 0.4% drag on growth. But it could be more because certain sectors will get affected a lot because it will get unproductive for us to export to the US. And diversification, though our merchandise exports basket is actually very diversified. It's equally distributed if you look in terms of share of EMs and DMs, but it takes time to find new markets. So I would say a 25% tariff, by the US on us, yes, the impact is more moderate. A 50% tariff, the impact will be a little more, and it will require. So, for example, the fiscal side has come in. We already have an income tax cut which got announced with the budget. Now the government is rolling out a GST tax cut. The RBI has also given considerable easing. But a 50% tariff will require slightly more policy support. So our base case, and I think what I read from the Fitch report, is that they don't expect the 50% tariff to actually come into effect. They expect that extra 25% penalty to not
Absolutely, Ms.
be
Sengupta. You made
repaid.
very imperative points, given how you're saying if it is 50%, then of course we're going to look at that impact a lot more than the 25%. We'll come back to you and get more perspective on that front. But Mr. Pachauri, thank you very much for also joining us this evening and more importantly, being extremely patient while we've had the opportunity to come to you. Let me ask you this, with the parliament, what we've seen here, virtually paralyzed this season, how severely does this legislative breakdown undermine the government's ability to whether deliver land, labour and compliance reforms? Because economists say this is, of course, essential for sustained growth. Also, how do you see the outreach to MSMEs as genuine dialogue or optics? What do you make of that?
Thank you. I would like to say one thing about the Fitch ratings report today, that what we needed was a bitter pill, and we have a placebo instead. What Mr. Iyer was talking about. You are talking about the parliament and how the discussions actually have an impact on our economy. Not much has come out of parliament discussions lately for many years. This year's almost 67% this monsoon session was wiped out, washed out, whatever word you use. We have to look at very hard facts about Fitch. Number one, I just like to tell you that BBB minus, we are in the same category as Romania, Colombia, Mexico, Brazil, and Turkey. So these people are also competing with us in terms of the US exports. Now there are countries BBB plus, which are Hungary, Indonesia, Thailand, and Bulgaria, out of which Indonesia and Thailand are competitors there. The government can improve things by two steps. Number one, what Mr. Iyer talked about, increasing investment, capex, and number two, increasing consumption. As far as consumption is concerned, he talked about the monsoon. A good monsoon is always good for India's consumption. But for the last 3 years, we have been declining in terms of consumption, and now it's come to 8%, according to the Euro consumption tracker, which used to be 18 and 19 and 17%. That is where the problem is. Where you're talking about the MSMEs, you're talking about the agricultural output, we are talking about rural India. Unless we put money in the hands of small businesses and agricultural labor and farmers, we are not going to see any increase in consumption in the near future. And that's the kind of thing which Mr. Modi was also talking about.
Right.
He's in election mode, so he's saying that I'm the masiha of all the farmers and pashupalaks and fishery owners and all that. That won't work because investment in these areas has a lag time of like 4 to 5 years. It takes a very long time. So announcing something now and to see its impact has a long time. And that could be an election sort of a spin. And I can see now that all of a sudden, we are totally ignoring, with the whole Trump tariffs hanging over our head, that what is going on in the country. In the country, Fitch also talks about the risk factors, and one of them is tariffs. The other risk factor in India are the election results. And we have seen in the past that the markets are impacted by election results, and even people's mood is impacted by election results. So that's when, if you think of the political economy, we are in a very tight situation. And someone has to bring out the facts and tell the facts and give a bit of pill to the government that wake up.
Right, Mr. Pachauri, I'm glad that you brought about that point about consumption, because like I was earlier stating, that the wage gap in India, that remains wider only, and that's essentially something that the CEA, Viananta Nageshwaran, stated almost a year back, that it essentially persists because profits of companies have gone up, they are at a 15-year high. However, wage growth is largely stagnated. And that becomes even more stark when you look at CXO salaries, Swami sir. But is it just a private sector issue? And if it's just a private sector issue, then how can this wage gap be corrected? expected if consumption has to sort of roll out steadily over the next couple of years?
It's a little difficult to extrapolate from wages in the formal sector to consumption overall. That the wages that you get, the formal sector is still a relatively small part of total wages and certainly of GDP. A huge amount comes from self-employment in farming, in small business. We also have this very fast-growing gig economy. The Blinkit is hiring dozens of guys on scooters going all over the place delivering. I do not know to what extent these people are earning more, but the very fact that so many guys are willing to work means they are better off than they would otherwise have been. So that's why, I have seen fears about wages, and there's been this talk of the wage gap. Nevertheless, in the face of all this, we've had this average growth of 7.85% in the last 2 years. Mr. Anant Nageswaran was expecting only 6.5. The actual outcomes are turning out to be so much stronger that I think there is great exaggeration about both the problem of consumption and the problem of investment. If both those are consonant with 7.8.5% growth, I don't see very much of a problem. This talk about the bulk, profits are being concentrated in a few large companies, that is certainly true. It is certainly true that we are now seeing the big three. The big three is Tata, Adani, Ambani, are right out there. Various measures of concentration in each sector. Look at civil aviation or steel or whatever, cement. I mean, everywhere you see concentration is coming. And in some sense, the Competition Commission perhaps should be looking out as to what is happening over there. On the other hand, I believe that we are undergoing a silent chaebolization, by which I mean in South Korea, their economic dynamism was achieved by a few very large conglomerates getting aid from the government in various ways, helping them expand at a breakneck speed. And this certainly led to concentration. At one point of time, I think Daewoo and Hyundai accounted for no less than 40% of the entire industrial output of Korea. But nevertheless, it succeeded. So if you ask me, the government is actively right now encouraging this concentration, especially in the top three. And they're going all out in solar and fabrication of silicon, infrastructure of every kind. These guys are being given every possible encouragement. Will this succeed in the absence of the kind of export orientation that Korea had? Lots of people raise this question, and we shall see. We do not know. But without doubt, concentration is taking place. But by itself, it does not necessarily mean it's a problem. It could also mean that this is a kind of chaebolization, which gives us at least partially, if not as much, of the kind of growth advantage that South Korea experienced when it had this concentration.
Right, Mr. Iyer, but like you said, that is for us to wait and watch if it would go in that particular direction. But Ms. Sengupta, let me come back to the point of what even Sumita raised in terms of the gap that we look at here. Because the once hyped national internship and apprenticeship that you're looking at plans seem to have clearly disappeared from policy discussions, right? And how critical are such programs in addressing India's employability as well as the wage gap that we look at?
So I think India's problem to solve is how we'll employ our growing working age population, basically unlocking the demographic dividend. For the next 20 years, we're going to have an expansion in our working age population. And from that perspective, we are uniquely set. It is I would say, a boon. But to unlock that boon, we need to be able to, absorb the labor force. Right now, what's happening is, on one hand, 40% of India is still employed in agriculture. And that 40% is contributing maybe 15% of the GVA. while the remainder of India, for example, services, which has the majority, the lion's share of the value added, is able to absorb a lesser quantum of people. And that's a function of the fact that it's less labor intensive. It's also a function of skilling. So, with that intent, these programs were launched. Yes, implementation is key.
About skilling,
But
sorry for interjecting you, Ms. Sen Gupta. Is this still dividend or a liability in times of artificial intelligence that we just cannot ignore?
I think it is a dividend because, for example, if you look at in the who is the end user? If you have an aging population, if you don't have a growing population or a young consumer base, in the end, all these countries will have to, you can't ignore the consumption base that India presents for the future. All these other countries, they will have different sets of problems. For example, Japan, it's an export-oriented country, right? It cannot survive on its own domestic population because of the fact that it is the negative, extremely negative demographic dividend that is facing that economy. In US right now, they are able to cater to their domestic population. A large part of that is thanks to the leverage capability. US is one of those few economies where the consumer will keep on borrowing even if their income growth slows down and consume. But the rest of the world is not like that. The rest of the world, the household, if you look at the consumption patterns, the borrowing patterns, we are far more, I would say, cautious.
Right.
So, from that perspective, from a future perspective, it's always better to have a economy which is growing, especially a population which is getting younger. Yes, we have to unlock it. We have to create jobs. We need to skill people so
Right.
that they can get from the agriculture, which is only giving you
Absolutely.
15% of GVA, and go into services, which
Right.
is giving you the lion's share. So that requires skilling. It requires also education.
Right.
Both of these take time to solve.
Right.
And more than the internship, I would just want
Absolutely.
to add one more point. More than the internship, it is
Right.
basically a combination between public sector and private sector. That will really unlock it. For example, you've seen certain companies when they're unable to find skilled labor force, they go on their own, they launch programs to train graduates to get them to a certain level. More such joint programs between the government as well as the private sector. I think that will be key for the skilling perspective because we also on the fiscal side have limited resources.
Right, right. And you make that, very important point about skilling. And of course, a private sector participation as far as skilling is also imperative. It is also important. Let me come to you, Mr. Pachauri, because, the Fitch report also mentions about private capex. Now, the past two budgets have focused on a capex boost and an infra boost, whether it's been, whether it is in terms of giving the railway boost or, the road network boost. There's been a consistent capex boost that's come in from the government. Then, of course, on PLI schemes, Make in India schemes as well. However, when you look at private sector capital expenditure, that has lagged since past many years. Does it really indicate a lack of confidence from the private sector so far as the Indian economy is concerned, and how can that be corrected?
One data point. Nominal GDP, the ratio or the percentage to private capex was 6.5% in 2010 and 2012. Now it is down to 2.9%. So it's a worry that private players, the companies, the corporates, they do not invest enough in India. And these are the people who are going abroad and investing abroad. So that is one big problem. And that has also led to what we were discussing about the employment and the wages. This has led to a huge crisis of employment in the country, which is disguised by these quick commerce people. You see them on every street, everywhere, rushing around, darting about very dangerously sometimes. All these quick commerce people because they do not get paid enough. That's number one. Number two, Prime Minister skilling program you talked about. Prime Minister's skilling program in this country of millions and millions of unemployed people had only about 8,000 people who finally got jobs. Okay. And this was the last 3 years, because they were paying 5,000 rupees a month to the interns. Now, can you imagine? I mean, that is less than your daily wage, government daily wage. So that's another thing. Third thing, a lot of unemployment these days is disguised in, say, your content creation. Everyone says, I'm creating content for YouTube, for Instagram, this, that kind of a thing. YouTube now can claim that they are the largest job creators in India, because they are giving 1 lakh rupee per year each to more than 8 lakh people who are making videos. So on the record, these people are all employed. If you go and talk to them, what do you do? I'm a influencer. I work for Zomato and Blinkit and all that. But what are you getting paid? Nothing. That's number one. Number two, this whole gig economy is giving us a false sense of job creation. We have to understand that, because the private sector, unfortunately, our government is doing a lot since the pandemic
Right, Mr. Pachauri.
in terms of capex, but the private sector is just
Right.
not doing enough. Yeah.
Right, and in fact, as you put that into context, Mr. Iyer, I also see that you want to make a point. But let me also ask you this, Mr. Iyer, while you make those other points as well, talking about the growth story, one challenge and one positive aspect that, all in all, that we're looking at.
Yeah, the one thing that worries me very seriously and nobody has mentioned, frankly, is the rise of artificial intelligence. This is already being used, shall I say, in the company in which I work itself. And the efforts are being made. How do you cut down staff, use the AI, get it for. We are only at the tip of this. If you look at some of the projections, they are frightening. So, I mean, the notion that government's killing or a few programs here or there are going to overcome it. That to me, I mean, the moment you look beyond the next 2-3 years, if you say, let us look at the medium term, which is going to be the greatest unemployment challenge, I think it is going to be artificial intelligence. I don't know which way it's going to go, how fast it's going to come to India. I do know that all companies are determined that we must use artificial intelligence. All the companies say that, this is the thing of the future, we must all use it. And it's very clear that if you use it, there is going to be a disappearance of a very large number of jobs, including perhaps some of us here. So all I can say is that that is a very major challenge, and much, much bigger challenge than the things we have talked about so far.
Right, sir. Right, sir, and that's something that we've seen with the TCS company. I mean, they have announced the reduction of jobs that's largely due to AI. Paytm has also made similar announcements, past year. And many more startups are also undertaking those job cuts on account of advancements in AI. Remains to be seen how that skilling gap will be fulfilled. But just one final question before we wrap up this chat, and this is going to be on tariffs. This is something that you brought up at the beginning of this discussion. If the tariffs are going to be negotiated lower, who's going to blink first, and how much of a cut can India expect?
As somebody will say, people will say, oh, God only knows, and now people will say Trump only knows. All I can say is this gentleman changes his opinion from week to week. What can I say? I mean, again and again, we are asked to forecast what the unpredictable man is going to do. So all I can say is that we can look through all this and say, somehow or the other, all this will be overcome. So let's just focus on the longer term. That is something which is more predictable and we can actually discuss. So that is the kind of thing we have been focusing on here. But beyond that, all I can say is that I expect that Mr. Trump is not going to come to an end with the tariff negotiations we're having. He is going to hit you again and again and again in all 4 years. He's going to hit you on pharmaceuticals, let us see when that comes. He's going to hit you on the outsourcing. this is, global capability centers have come up in a huge way. More than 1 million jobs, which used to be in R&D, engineering and things. All of these have been offshore to India, and it's rising year after year. Companies like Accenture, companies like IBM have more employees already in India than they do in the USA. So believe me, Mr. Trump is going to keep hitting you in the next 3 years. Do not think that this tariff things is just something that has begun and is going to be over. It's going to continue for the next 3 years. That's why I say we really don't know what's going to happen. And while I do hope that everything gets fixed, I have to just send out a warning note. Things may actually get worse. Sorry to be on such a negative note throughout, but I just think it's needed for balance. I too am hoping that, we somehow negotiate our way out, not only on this occasion, but the subsequent rounds. But just a note of caution that the problem is far from settled, even if
Caution
Mr.
is the
Trump
word,
brings
Mr.
down
Iyer,
his
and
tariff
that's the
system.
bitter pill perhaps to look at it. Maybe on a lighter note, Sumita, who does spearhead this for us, was hoping that it's the end. But Sumita, you've heard the message, a lot more to come. But for the moment, Mr. Iyer, as well as Mr. Pachauri and Ms. Gupta, thank you very much for joining us on the show tonight to essentially not just tell us about how you're looking at this, but given the aspect that we'll continue to see at least the tariff story unfold. But for the moment, we leave it at that because we're slipping into a quick break here on India Tonight. But stay with us this Monday evening. Lots more coming up on the other side with Sumita and me. Don't go anywhere.